Good morning, traders. This is Michael coming to you from Game Edge on Thursday, August 28th with our pre-market prep session. We'll cover our three pillars here at Game Edge, as we always do: sentiment, structure, and trend, as well as individual equities that we're seeing approach key gamma delta levels for today using our TradingView script as well as our Thinkorswim script. As always, join us at gameedge.us. Put in your email here for our newsletter section. We provide a newsletter every weekend concerning different strategies as well as our methodology and as covering our tools here and how we look at the SPX option structure to help you become a profitable trader. Check out our free courses. Game Edge Fast Pass flagship education course covers all of our content there, as well as two other courses that you can sign up for, again delivered to you all for free. And then if you click on the pricing tab, this will be taken to our Discord, 14-day free trial, all the tools turned on for our large trading community, extensive traders with all varying backgrounds and experience levels, happy to help you get up to speed. And we also provide one-on-one education also. As the team here at Game Edge, we are in the trenches with you, trading with our money, also using our tools, showing you how to navigate the SPX option structure. So let's go ahead and jump right into the trend model. This is our market trend model based on the tick index to get orientated. The bolded white CT is our intraday instantaneous cumulative tick. If you're a 0DT trader, this should be what you're focused on. Yesterday, we saw that rising from lower left to upper right to the upside. I covered that pre-market in our prep session, what we wanted to see if we're going to see the bulls take back control, which is the overall buyers. And we saw that really linear up day yesterday. You see the filtered cumulative tick, plus 1,000, minus 1,000, large block orders just expanding to the upside, really kind of exploding to the upside. So institutions were extremely involved yesterday. And then the new highs versus new lows breadth indicator, obviously new highs outpacing new lows, not as extensively as this large linear up day where we were pushing 100,000, but still a significant move to the upside via institutions participating in the overall market. So more buying versus selling. Moving on to the quality tick, this is our ARCX. This is what we base our mechanical portfolio on, P-Trans to PX portfolio. Really a linear up day, as we call it, straight to the upside. So now we'll see how this continues and plays out. But anytime you see this bolded CT crossing above these shorter term momentum moving averages that we place on this chart, as well as emerging out of the colored ribbon, you need to get in motion to be long the overall market as quickly as possible. And then we continue to see how this plays out to the upside. So again, we'll watch this day over day and intraday to see if the bulls and buyers remain control in the overall market. Moving on, the SPXA, this is our cruise ship, obviously via the contract expiries over here, which are monthlies, 40,000 foot view, larger market participants. We kept discussing the transition area here. In the overall SPXA, we wanted to stay above. We separate the SPXA and the SPXP due to the expiries. This does exert force on the overall market, but not that intraday or really instantaneous force via the weekly either. So that's why we want to watch this for the overall positioning of institutions. They plot the course, and then the speedboats do the overall maneuvering intraday around the SPX option structure. So again, staying above transition, we see 6,500, and then we actually see PX up here, that highest peak of local call speculation there at 6,600. So once we get through 6,500, we still see out of the money call speculation all the way up towards 6,600. Moving on, the SPXP, again, these are our speedboats. These really maneuver us around those areas intraday as well as weekly, as you'll notice by the expiries over here. Again, transition area fairly narrow, 55 to 70, staying above transition, still bullish. On an E pullback, this is an opportunity to get involved as long as we stay call dominated above and below spot price. So you see that green net delta above and below, and then we see the JPM hedge strike here at 6,500. So we'll continue to probably chop around this area. This will continue to exert some force. Getting through the 6,500, we'll have to see large transactions on our intraday volume metrics tool via our vol-m command. So we'll watch that intraday. But again, staying above transition maintains the bullishness of the overall market. Moving on to the SPXP, we call this the gamma edge ratio or the GEX ratio. Basically, this is call gamma to put gamma. It's a put call ratio, but we add a gamma component to it. So obviously that gives us a short dated component to watch how market participants are positioning. We talked about this continuing to rise with a positive slope as SPX price appreciates. This is obviously a positive divergence. We want to see the short-dated call speculation continue to go into the overall complex as we see spot price rise. This will continue to be supportive of price appreciation. If we start to see some divergence where this turns down towards the negative, obviously the out-of-the-money call speculation will start to wane and dry up as SPX moves higher, and then that resolves one of two ways. SPX will continue to consolidate or come back down to match the falling GEX ratio. So we'll continue to watch this. But as of now, steady as she goes, bullish call speculators are in control at the overall market, or in the overall market. SPXP delta balance, this is where we separate above and below spot price. So the green is the right-hand plane above spot price, the red is the left-hand plane below spot price, and then the blue dotted line is the aggregate of the two of these. Again, staying above zero indicates call speculators are maintaining overall control, as well as bulls. Call dominated, delta balance pegged at 1. Again, call speculators in control. And then we can see on out in time projection. This would be Friday, and then on into next week. So we do see the left-hand plane fall a little bit. This just may be some out-of-the-money speculation put hedging, which is perfectly normal within an overall rising SPX. Again, we want to see that stay above zero. You want to see this, if it's dropping, then rebound back to the upside. But we do see still to the upside, that right-hand plane, that's your out-of-the-money call speculation really continuing to drive to the upside, even with a slight drop into Friday, and then driving back to the upside, maintaining that delta balance almost 1, but then drops a little bit. So we'll watch for this. This could be some short-term weakness coming in next week. Obviously, shortened week next week with Labor Day, so we could see some midweek weakness, and then possibly watch for a rebound back to the upside. So we'll watch this day over day, but really nothing changing. Call speculators in control, still bullish overall look. All right, moving on to the SPXP 0 DTE, what everybody wants to get to. Call dominated above and below spot price. Narrow transition today. This gives us unambiguous overall trading plan. Above the transition, we're bullish long. Below the transition, not necessarily bearish. We'd look for the bottom of DS to be supportive, just slightly more cautionary, obviously down towards 64.50. If we're below 64.50, then we do have the opportunity to move a little bit lower towards 64.20, 25. You see a little bit lower exposure in here. And if the vol metrics, vol M command intraday are indicating that that out of the money put speculators are transacting lower, then we could drive down towards that 2025 level. Again, within the overall drunken sailor range, we'll be at the mercy of the intraday volume metrics, so we'll be pushed around there on the ocean, kind of without a rudder back and forth. But that tool that we have will help us plot our course to see if we have positive call and put centroid slopes. To the upside, 6,500, obviously PGEX, that's the highest speculative area that we'd anticipate price to move up towards. All right, SPXP net stack command, obviously highest sensitivity levels for today, 6,500 to the upside. We are what we call dominated in the delta space, matching obviously our web app. So any pullback we'd anticipate to get involved in the overall market to the upside. 6,500, if we start capturing these out of the money calls, those will become more positive delta in our book, negative delta on the dealer's book. They will have to buy to hedge. So that could be that key area that we move through and then start moving to the upside. You see charm is going to be an overhead weight, a little bit larger in the right-hand plane integral than the left-hand plane. Again, 64.50 we talked about. As long as we stay above those out of the money puts, on the charm side, those will continue to be supportive. And then we see our gamma levels. I talked about 6,500. This is really kind of the acceleration. If we start capturing those out of the money calls become in the money. That's why we say over here, moneyness matters. And that's really important via overall books. Then we see Vanna. If we do see volatility drop, obviously we have an opportunity to move to the upside. Fairly balanced, though. We do give an edge to the right-hand plane there on that, but out of the money puts, out of the money calls. So key takeaway is we're call dominated above and below spot price. Charm will be a little bit of an overhead weight if we stay below, obviously 65.75, not dramatic as we've seen, but supportive on the downside also. So again, supportive here, supportive with charm, and then we have our key gamma level there at 64.80. So again, if we get below 64.80, we could see a little bit more acceleration down towards that 64.50. All right, let's move on to our trading view chart for this morning. I think we've already talked about the key levels here. Here's our drunken sailor range. I've overlaid the 0 DT transition levels as well as our full script, again, provided to our members. Easy to copy and paste in TradingView or Thinkorswim. Obviously, 6,500 is really going to be that target to the upside if we can get through the prior day high and 64.90. then pull back to drunken sailor range or transition zones. Again, opportunities to get involved on them into the upside. And then below drunken sailor range, you see multiple levels of supportive type action demand down here at 0 GEX, COTMP, and then the bottom of drunken sailor range. So we'd have to see a complete fall apart of the overall sentiment structure and a large change in this to really drive to the downside and really start losing anything, which, again, that would be most likely a outlying event would cause that to occur. So obviously we see SPY there above transition. We see Qs trying to move above transition. And then we see IWM really holding strong above all the transition levels. 240 to the upside would be the area we'd watching for IWM to move towards. All right, let's fly through a few stocks here. 230 level on Apple. We were discussing that one. AMD above P-Trans, 170 to the upside. Google's been really strong, really bucking the overall trend. So 210 to the upside on Google. We do see Meta, a little bit weaker below N-Trans and P-Trans. So if we get through those two levels to the upside, obviously we could look for a move back up. Tesla really just continues to oscillate around that 350 plus GEX. We'd like to see that structure continue to advance to the upside, see that PGEX move up to 360, as well as COI continue to advance if Tesla's going to move much higher. And then NVIDIA really holding this key area this morning, P-Trans 178, and then we see PGEX to the upside 185. So again, really our trading view levels really match that overnight price action, drop down to 0 GEX, N-Trans, negative GEX, really bought right back up at 170, and then we're driving through P-Trans and then 185 overhead. So we'll continue to watch that. PLTR, been in one that we've talked about. So we hit 160, and you can really see what happens when you hit that COI level. That's the highest call open interest. Most likely you'll see monetization around COI, even though we have plus GEX up here 165, and you see pulling back from 160 now back towards P-Trans. As long as we hold 0 GEX, N-Trans, or even above 150, we'd look for an opportunity there. Microsoft holding P-Trans, Amazon above P-Trans. So I think you kind of get the theme. Most of these liquid stocks are holding key gamma delta levels to the downside until we see this change significantly in sentiment and structure. When we start getting below these key levels, the market most likely will continue to be supportive and move higher. Bob, I've been watching this one with the China stocks really moving higher. 120 is going to be that key level overhead to get through. So, all right, hopefully that helps everybody for today. A little bit shorter. Just wanted to go over, obviously, our pre-market prep, our game plan, how we're looking at the day. We'll go back to the 0DT chart. Again, unambiguous transition, need to stay above. For a move to the upside, drunken sailor range can be choppy. Obviously, 6,500, that key target to the upside. So let me know if anybody needs anything. Thanks for joining us this morning. Again, check us out at gammaedge.us. Follow us on X and YouTube. Like and subscribe. Hopefully, we'll be able to go live midday again with updates, and then check out our post-market prep where we do a breakdown of the price action for the day, how we used our tools, and how we profited. So, all right, everybody, thanks, and